the business of bees, bee decline and the economic sting. Today's webinar reconsiders the links between corporate finance and the wider ecosystem upon which it ultimately depends. With bee population decline a pressing issue, we are asking today, what are the implications for investment finance and what is the corporate world doing to plan for this? Following a brief introduction by Jill Atkins, the editor of the new book Business of Bees, there will be a brief presentation from 4 of the book's contributors. I should also point out that Jill is the Chair in Financial Management at Sheffield University Management School, so we're in good hands here. So without much further ado, it's over to you, Jill.
Hello, and thank you for the introduction. Thank you everybody for taking part in today's webinar on the business of bees. I would like to start proceedings by talking about the background to the book and my motivation for developing this project. For many years I've been a researcher in social and environmental accounting and have increasingly been focusing on accounting for biodiversity. This has involved looking at the ways multinational corporations are acting to preserve species of flora and fauna around the world. Specifically, I've been working with colleagues to assess ways in which companies report on their impact on species, and we've researched the corporate disclosures on species protection and conservation in annual reports, newly formed integrated reports, sustainability reports, and also on corporate websites. Recently, I've become deeply concerned about extinction rates and species extinction. As you're most likely aware, we are currently experiencing the 6th period of mass extinction on planet Earth. Earlier mass extinctions include, for example, the end of the dinosaurs, which was caused, as we all know, by a meteor striking the Earth. The rather frightening fact about the current era of mass extinction is that it has been caused by one species alone, namely ourselves. Human activity has resulted in habitat loss, climate change, pollution, acidification of the oceans, and now mass extinction. For mammals, the natural or background rate of extinction is estimated at one species disappearing every 700 years. Currently, the extinction rate is estimated to be as much as 10,000 times higher than this natural or background rate. Current estimates suggest that almost 17,000 plant and animal species are currently threatened with extinction. So why is extinction a business issue? The reason is that the health and balance of the world's ecosystem is critical to the survival of the human race. All species are intricately linked to each other through the complexity of our planet's ecosystem. As the dominant species rely on the functioning of the ecosystem for food and many other life-sustaining products. Putting this in financial terms, the monetary value of goods and services provided by the global ecosystem is approximately $33 trillion a year. This is almost twice the global production resulting from human activities. Simply considering marine ecosystems, we take about 100 million metric tons of aquatic organisms, including fish, mollusks, and crustaceans from the seas every year for food and other purposes. So why are bees important enough to be the focus of the whole book, and why are they such a significant issue for business, for accounting, and for the investment community? I decided to research the business of bees when I read some years ago about a Chinese province where bees have disappeared entirely due to pesticide use and other factors. The result is that all the crops now have to be pollinated by hand. Literally, people have to go from plant to plant with a brush to pollinate flowers. It is a harsh reality that worldwide bees are in critical decline. In terms of extinction threat, recent statistics show that from a total of 1,101 species of bees, almost 15% of bee species across Europe are now threatened or near threatened with extinction. The statistics on bee loss are truly shocking. The latest figures for the United States indicate that just over 40% of bee colonies were lost in the last year. In North America, there has been a decline of up to 96% in 4 different bumblebee species over the last 20 years. Similar figures apply across Europe and other parts of the world for both commercial and wild bee populations. Scientific research has focused mainly on the causes of bee loss, and researchers have identified a wide array of causes, including habitat loss, pests and disease, agricultural pesticides such as neonicotinoids, nutritional deficiencies and climate change impacts. Controversies and legal cases between beekeepers and agrochemical companies over the use of neonics are an important element of the book, The Business of Bees. The financial implications of bee loss are immense. If bees disappear entirely, it would cost an estimated $90 billion a year in the US alone to pollinate by hand. The financial materiality of bee decline implies that companies' share value is at risk through impacts on crop production and consequently on food suppliers and food retailers. In our book, The Business of Bees, we explore the age-old relationship between bees and the human race from many perspectives, including scientific, cultural, philosophical, and also economic. We consider the ways in which people's relationship with bees has evolved and changed over the centuries. Most notably, we've moved from keeping hives for honey production to employing bees on a mass commercial basis for their pollinating services. Millions of hives a year are rented out and transported from farm to farm for commercial agricultural pollination. We've been fortunate enough to have contributions from 24 academics and practitioners to the book investigating the business case for saving bees, as well as the deep ecology perspective. In our book, there is a focus on accounting for bees, where several chapters analyse the ways in which companies around the world disclose information on their efforts to protect bees through bee-friendly policies, as well as through relationships with their suppliers. There is a substantial difference across countries in bee accounting. Today we are focusing on one very core element of the book, notably the crucial role that the institutional investment community is playing in preventing bee decline and extinction. By engaging actively with companies around the world, responsible investors have a huge potential to encourage companies to develop policies and initiatives which can and which will save bees. We recognise that we cannot separate bee decline from society, from the future of the planet, from business, or from investment return, and we acknowledge that the world can continue very well without humans, but not without bees. I now hand over to my co-authors, Abigail Herron, Martina Macpherson, Rick Stathers, and Raj Thamotheram, to talk about the role of responsible investment in the business of bees.
Jill, thank you very much. As Jill said, our first speaker is Abigail Herron. She's the head of responsible investment engagement and Aviva investors. She today will be talking about bees and portfolio risk, the case for investor action. Abigail.
Thank you. Hello, everybody. I'm Abigail Herron. Just a little bit about what head of engagement means at Aviva Investors. It basically means I spend my days talking to the companies that we invest in. So in the morning, I might be encouraging them to up their game on climate change. Maybe over lunch, I would be having a frank conversation about executive pay. Maybe in the afternoon, antibiotic resistance. So I have to know the whole spectrum of environmental, social and governance risks that could be applicable to the companies that we invest in, as well as opportunities that they may or may not be missing out on. I also complement that with public policy, lobbying. Well, we're meant to say advocacy now, not lobbying, but so I do a lot of that at the UK, EU and UN level. So what I wanted to do quickly today was to share the experiences that we've had at Aviva Investors on pollinators. Firstly, I wanted to just talk about how investors can pitch pollinators as a portfolio risk. Secondly, I wanted to talk about how we found raising this topic with the companies we invest in. And then thirdly, I wanted to cover what investors should be doing. So there's some ideas and opportunities for intervention there. So first of all, you're pitching this topic to your fund managers, for example, in an investment house. At first, bees, it might sound like a very fluffy topic. Your fund manager might have a hard time buying into that. So here's a couple of ways to pitch pitch pollinators as a portfolio risk. First of all, couching it in terms of the systemic risk. This is something Jill picked up on in her introduction. Back in 2009, the UK government's chief scientist, John Beddington, warned that in 2030 we're going to live in a world that demands 50% more energy, 50% more food, and 30% more water. All of this against a backdrop of far greater climate variability. And this challenge, this water, energy, food, security nexus challenge, doesn't even take into account the impact of pollinator loss, which very much has the potential to compound this looming sort of perfect storm. So there's a number of sectors that stand to be affected adversely by the decline of pollinators, not least agricultural commodities, food producers, food retailers, the pharmaceutical sector, and the global nature of many investors' assets under management means that this is a systemic risk, and a loss of pollinators has the potential to impact heavily on the valuation model of companies and ultimately the whole portfolio value. So Aviva investors are long-term investors, and the direction of travel that we've seen on the news, in the book, pretty much everywhere you turn on this topic, the direction of travel means that matters are only really going to get worse for food retailers and food producers while we invest in them. And the graph on this first slide speaks to this. There's another way, of course, of pitching this. Many investment houses have insurance companies as their parent company, and maybe they offer crop insurance. So that's another avenue to start that conversation and make the case for bees being an emergent but pertinent topic. So that's one rational way that you can approach buy-in for consideration, for action on this topic. And failing that, many fund managers, they might have large gardens or estates. They may have noticed themselves decline in pollinators. Some may even keep bees themselves. We have got bees on the roof of our offices in central London. So one day I took some of our fund managers up on the roof in full beekeeping kit to see the honeybees on the roof, which was amusing for everyone, especially the diners on the rooftop garden who weren't quite sure what was going on. So on this second slide, we go to the next stage for investors, which is, okay, you've already bought into pollinators as a systemic risk across your portfolio. What do you do next? So these are some questions that you can ask in the inaugural meeting with companies you invest in that stand to be materially affected by this. And this is really just to get the conversation going. But what I found in my experience is the answers to these sorts of questions may be faltering because this is not a topic they're used to having questions on. But the calibre of the response that you get is an excellent proxy for the overall management of sustainability within the company. So, engagement is a natural starting point for determining the calibre of your investee company's responses to this, but it's only one tool at your disposal, and we also face a number of challenges. So there's a significant lack of research on pollinators. One of the first places where investors will get their information on the risks and opportunities that are present at the companies they invest in is in SellSide broker research. And research on pollinators is pretty much notable by its absence on this topic. Second of all, we could see the macroeconomic implications of this, crop reliability, food insecurity, commodity price fluctuation. All of these are very difficult to capture using conventional valuation models. So there's a bigger picture conversation that needs to be had with of course your brokers, but also with your in-house teams that do the modelling on how you can capture that. And then thirdly, there's a mechanism that not many people have heard about, but we're seeing some pretty big ripples coming out of it. This is the OECD's guidelines for multinational enterprises. Now, these guidelines cover several themes, and one of them is the environment. And then drilling down into that, there's this mechanism known as the national contact point, and each country in the OECD group of countries has one. in the UK, for example, BIS runs it. And it's basically a portal for mediation. So when a non-government organisation, an NGO, has got a concern with a company, they can take it to these national contact points and say, look, we think this company is, for example, drilling in a World Heritage Site or something like that. And then the national contact point can investigate. And so what we're seeing is, recent studies have highlighted a relationship between a decline in pollinators and neonicotinoids. I mean, it's not the sole responsibility, as Jill alluded to earlier, but given the number of NGOs that are focusing on pollinators, I think it's only a matter of time before a concern gets raised at a national contact point level by an NGO. So I think that's one area that we're watching very closely. And then my final slide. So the very first time I started thinking about pollinator decline was when I was on holiday in California. I was driving down the highway, paying a lot of attention to drive on the wrong side of the road, and I came across a lorry of bees. And I was driving through almond fields that were in blossom. And so I pulled over at the side of the road, and very outgoing people in California started to chat with the lorry driver. And he told me that he drives all the way up the west coast, which you can see on the slide, some of the routes that commercial pollination lorries take. And, he drives up and down through the monoculture crops, releases the bees for pollination, recalls the bees back onto the lorry, which I have no idea how you recall a bee. I can barely recall my own dog, so that in itself is fascinating. But the serious point is that this is highly stressful for bees, and there's a high fatality rate on this. So that's one alternative that is being used in the US to plug the gap of a lack of natural pollinators. The other one, which is also on this slide, is what Jill mentioned in her introduction, the manual pollination by hand of apples and pears, which have now become prestigious fruits in China because the manual pollination increases the price so much. But the scary fact is I read that even if everybody in the world stopped what they were doing and pollinated crops 24 hours a day, there's still not enough people to feed the planet doing it that way. So the whole point of this is it's very clear the alternatives to natural pollination aren't really alternatives at all. Which brings me back to my central point, what can and what should investors be doing? First of all, I think it's important and pertinent to weave the decline of pollinators into engagement to gain a greater understanding of how investee companies are responding and to put it on the agenda so they know this is something that is of concern to their investors. Secondly, investors often have real estate as an asset class. So if you're in a position where you own direct real estate, you can ask for suitable forage to be factored into sustainability aspirations you have for new property acquisitions, retrofits, these sorts of things. Thirdly, I mentioned earlier the lack of research on this. There's scant SellSide broker research on this or environmental, social and governance research providers information on this. So it's something that investors should be asking for, given that they're the client. There's also a window of opportunity to engage with policymakers in the UK, also in the EU on this, on a variety of topics, including the EU moratorium on the use of neonicotinoids, which is currently in place. If that's something you would like to know more about, please get in touch with me afterwards. And finally, I think from a civil society perspective, it's very important to work on financial literacy. So where I'm going with this is the average man or woman on the street has very little understanding that his financial products, his pension, his investments actually invest in companies that are at the very centre of this debate. So what I think we'll see, my prediction is that NGOs will be encouraging the membership base to get to write to their financial service providers and get them to use their collective stake in the capital markets to effect positive change on this topic.
Thank you for that, Abigail. I'll just say a few words before Martina starts. Really pleased to have Martina speaking today, Martina Macpherson. She's the Head of Sustainability Indices at S&P Dow Jones, and today she'll be talking about fees and accountability, a multi-stakeholder perspective. Martina.
Thank you very much, Abigail, Jill, and James as well for this introduction. Just a quick word up front. Obviously, the views expressed here is part of our research, and that was Christoph Beals from Henley Business School's research and my own. Does not necessarily reflect, now the analysis I'm undertaking at S&P. I've joined the company just 4 weeks ago, but we are full on track on looking into natural capital preservation and opportunities here from a passive investment standpoint, so more to come at this end. What I'd like to cover today is actually why did Chris and I look into bees and accountability and looked specifically at the issues involving multiple stakeholders and multi-causality factors in Germany, linking the debate towards bee health and the bee health controversy. So first of all, we found that, in Germany, which is the home of the 2 largest European beekeepers associations, the reason why we are looking at bee or accountability for bees in Germany is it is actually the home of 1 or 2 of the largest European beekeepers associations. Obviously, it includes a very eco-conscious society and obviously government. I'm sure you've heard about many of the eco initiatives in Germany and the Federal Natural Conservation Act from 1998, which actually looks at natural preservation and animal welfare in much depth and detail, but it's also actually home to some of the industrial farmers associations supporting them and some of the largest chemical producers actually that also fund research into bee health. And we feel, that there's actually room for a debate here, and we feel that the bee health controversy needs to be looked at from various different standpoints, not only looking at some of the challenges, but also ultimately how we could find solutions through a multi-stakeholder approach in addressing them. So, we've also looked at actually various types of factors, looking at what's driving the bee health controversy issue. So in our chapter, we actually assessed some of the factors for the strong decline in the number of professional beekeepers and hobby beekeepers. We actually looked at the multi-causality factors around bee health, and again at some of the stakeholders involved. And we interestingly also took it a step further, and we looked at, the impact of renewable energy and other land use practices and their impact on the bees' natural habitat and biodiversity. Given, that the German government in particular has actually increased its targets for renewable energy from actually 20% for electricity by 2020, up from currently 20 to actually 45% by 2030. And that's been, obviously, that is driving its own challenges, and I will come to that in a moment and give a few more details. What we've also actually looked at is the impact of pollinator loss. Abigail and Jill both have alluded to the fact that this is actually not just an ESG non-financial issue, it's actually an interconnected material extra financial issue as we have framed it, and also, links to economic issues and impact. So that is everything from obviously the usual animal welfare debate issues, but also the wider issues around natural capital preservation and food security, linking it as well to human welfare and nutrition, and therefore, needs a stronger focus not only from here, the stakeholders that we are assessing, and that's predominantly corporates and scientists and farmer associations, but ultimately that links us back to Abigail's point on what could ultimately investors do to support the bee welfare debate. We also looked in a bit of detail into some of the key figures, and we looked at the economic impact. As you can see here on my slide, it's quite mind-numbing to see that currently the global economic benefit of pollination amounts to something like 265 billion euro. And, you know, that we feel that, or we feel the UN FAO actually came up with a report saying that in Europe, now going back from the US, actually 84% of the 264 crop species are all animal pollinated, and that means 4,000 of the current vegetable varieties actually exist thanks to bees or pollinators overall. So we feel, you know, that's actually showcasing a big of what impact it will have if the pollinators per se will be extinct and disappear. On the second following slide, James, if you wouldn't mind following on from here. Thank you. You can also see that we have assessed the stakeholders and their positions in the bee health controversy debate in more detail. So I mentioned a bit earlier, we looked at a variety of different stakeholders, so that's predominantly companies, chemical companies here. We looked at the role of the beekeeper associations, the German farmer associations, and then obviously research and science. And what is actually quite interesting is that these different stakeholder groups are very much interlinked and intertwined. So we used OCOM's research and looked into some of the reports around Bayer, Syngenta, and BASF, the major chemical companies, most of them actually headquartered in Germany, that all have been involved in what they call sustainable chemicals management controversies. So it is interesting for us to see, summarizing their research and also their positioning on the bee health debate, that they're trying to drive the varroa mite narrative, as it's called, so actually looking at factors beyond chemicals as one of the key factors for the loss of bee colonies and actually loss of pollination. We then compared that with the role and the position of the beekeeper associations, and I give you a quick background here. I mean, Germany with the DIB, that's the Hobby Beekeepers Association, is actually home to the largest national association of beekeepers. Literally, we're talking here about almost 100,000 members. The association was formed 100 years ago. And we have the DBIB, and that's the Professional Beekeepers Association. Much smaller amount of actually members, just around 800, but it's fair to say that actually these 800 own 50% of all bee colonies in Germany, and they obviously do a lot of not only professional beekeeping, but also research into the issues and work closely with their European umbrella organization called the EPBA. And literally what's fair to say here is that they all point toward a multi-causality explanation for the pollinator loss. So we've literally looked into a bit more depth and researched their reports and their activities. And they have not only come up with actually multiple causes from actually the varroa mite narrative into the pesticides debate, but they've also gone beyond and looked into actively supporting some of the bee-friendly activities. So, for instance, they have established a certified bee-friendly label, and hence, you know, cooperate very closely with specific sectors here, especially food, textile, and energy producers, actually to actively support bee welfare. And then last but not least, we also looked at the position of the German Farmers Association. I mentioned a bit earlier that they have a clear invested interest in the renewable energy debate. That's actually for various type of reasons. So on the one hand, they are very heavily involved in creating monocultures of silo maize and rapeseed in order to produce bioenergy. But they are not only the producers of biomass per se here, but also the suppliers of bioenergy, given that, I don't know if you've seen or heard that before, but actually three-fourths of all biogas facilities in Germany are actually owned by the farmers themselves. And they're heavily invested into this area between 2009 and 13, something like 20 billion euro into biogas. So hence, you know, they have an invested interest in looking into transforming our current or the current land use and field practices into renewable energy, in renewable energy use practices, which in turn ultimately means a threat of natural habitat and a loss of biodiversity for the current existing free fields or used fields that are actually pollinated heavily by the bees in the world. And then last but not least, it's fair to say the position of research and science here. I mean, we also looked at two of the major so-called bee health monitoring initiatives in Germany, that's DBMO and FitBee. And we actually found interesting links here as well between the different stakeholders. Not only actually are these organizations researching and monitoring bee health, they're ultimately supported by Bayer and by Syngenta. And that means them and the German Farmers Association, also which have naturally strong links with some of the chemical producing companies, given that they use their products, both actually follow what we call monocausality Varroa narrative. And here we feel, you know, there is ultimately a conflict of interest between these stakeholders, between their real ambition and real interest in the bee welfare debate. And I just want to summarize here, and I'm happy to answer questions afterwards. What we found is obviously not only the multi-causality issues and the real problems that are behind the bee welfare debate, the controversies involving the multi-stakeholders and ultimately conflicts of interest. We've also tried to take it a bit further and looked into some of the solutions that they're proposing. And hence, you know, we have come with our own little reference here, what we call the multi-stakeholder solution. And we're hoping, and that's in line with what Abigail just outlined, you know, that we see more corporate disclosure and transparency around the issue. And that's predominantly also from chemical companies involved in the debate. That we hopefully see more public interest in beekeeping, because again, the beekeepers associations are heavily in decline, especially the hobby beekeepers have seen a strong decrease in numbers. And, you know, we also hope that we see more natural habitat preservation activities that will involve the various stakeholders just outlined and mentioned, and that some of these bee-friendly education initiatives that are led, for instance, by DBIB and others, and some of the so-called certified bee-friendly labels will get a bit more traction. And then last but not least, you know, we see that there is an increasing effort in looking into alternatives to the current renewable energy debate and supply. And we've seen there is an increased focus in Germany to look for alternatives beyond monocultures, so maize and rapeseed, so that there is an interest in wildflowers and even a wildflower bonus for energy producers, you know, that actually go beyond the current maize and other products. So hence, you know, we feel that there is room for improvement, but there is definitely room for all stakeholders to work jointly together and to actually come to the table and to debate the issue in a transparent way and manner. And hence, you know, I wanted to quickly mention that we all get together at a dedicated engagement session and roundtable that's going to be hosted by Hermes EOS in October in London. And for everyone here on this call and beyond who is interested in attending, please let us know. We are trying really to bring the different stakeholders together and have this type of open, transparent, and hopefully effective debate around addressing challenges and finding solutions. Thank you.
Martina, thanks very much. That was very stimulating and interesting issues that you brought up. So thank you. Okay, well, moving on. I'm aware that we're quite short of time today. So moving on, our next speaker is Stathers. He's an ESG investment specialist. He'll be talking today about the bee in the stock market, an overview of pollinator decline and its economic and corporate significance. So over to you, Rick.
So I first started hearing about this issue probably about 8 years ago, and it took about 4 years until I actually put together all the research I'd been collected and started to gather my thoughts when I was head of responsible investment at Schroders. And as we've heard, there are obviously the scientific data about the pollinator decline and the current rate of it. We've also got the causes from habitat loss, pesticide use, predators. And then for me, what was most important, because obviously I'm trying to bring this as a topic, like Abigail was, to the investors at Schroders was this economic cost. The fact that we had a value for an economic service meant that, in my mind and in theory, we could therefore assess a company on its exposure and its risk management practices, and then use that to integrate into our valuation methodology, as ESG integration is supposed to be trying to do. And before I get onto that, I'd just first like to get back to this issue of this economic data. What we have is that there are a range of figures, and most of these are all created from an economic deficit model. So basically, how much does it cost, or how much is the lost value from losing 1 ton of strawberries? It's quite a simplistic thing. What we don't have, and I haven't really read much about it, hearing Jill's comments about the cost of hand pollination in the US is the first to me, but what there's very little research on is this compensation model, i.e. the replacement cost for pollinators. So how much would it cost to increase the amount of cultivated land area in order to compensate for lost production? Obviously that comes with associated habitat loss. How much do we need to increase the use of commercial pollinators at a time when their costs are going up and their beehives, as we've already heard, are under pressure and collapsing? So those costs will come up. And then the prohibitive alternative of hand pollination, which maybe in the days of automation might be, and drones might be there might be a solution to. And on this economic cost, it's important that whilst we can have a figure for pollination services, the 33 trillion figure that Jill mentioned earlier is probably the bigger one, because these are just the canary in the coal mine. Other microorganisms who have a vital role to play in soil formation, water purification, or even oxygen production are all under stress from current methods of economic growth. And as Abigail said, this is only going to increase in stress as we need the predicted demand of food increase of an increase of 70% by 2050. So if we're talking about sustainable economic growth, it does raise the question that can we actually afford any level of cost from pollinator decline? There is good news when looking at the economics of pollinators. There's increasing evidence of the value of economic services, of the positives of economic services, I guess an economic credit model. So the value and increased yield of a field of pollinator-dependent crops growing next to an intact forest which provides the habitat, the value of that forest is greater than if that forest was deforested and cultivated. So which makes the argument for preservation and conservation. There's also research that would suggest that the creation of pollinator-friendly habitat will pay for itself within 4 years from increased yields. So there are some arguments, but my main purpose when writing this paper was to think about how can we integrate it, pollinator decline, into our valuation models. We've looked, or I talked briefly about the economic costs, and the absence of research and discussion by the economic community within the investment industry, it mirrors the absence of research and discussion on climate change and its economic costs, unsurprisingly. But without this, we can't really talk about what is the impacts of long-term economic growth, and we can't really talk about, a decrease in yield and productivity will create food inflation, which would decrease consumer spending. So we don't know fully how to adjust the revenue forecast for companies that are exposed to this issue. But we do know which crops are dependent on pollinator services, and there's a large variety of dependents, and therefore that their yields could likely decrease, which would lead to an increase in the cost of goods sold for companies. So you could look at how would you adjust the operating costs for a company that we are analysing. And I guess, the absence of the macro data made me focus on analysing companies and their risk management and exposure. And so back in 2013, I looked at 25 global companies and the agrochemicals companies that have already been mentioned, food retailers, food producers, beverage companies, luxury product companies, And I looked at their corporate responsibility disclosures and their annual report disclosures, and I would point out Section 3 of this book has a very good review of the level of engagement by companies around the world, and it's probably much more up to date than when I did it. I also had 2 written exchanges with two of those 25 companies and 6 face-to-face meetings. So my findings were that a third of these 25 companies, around 8, recognise the risk of ecosystem decline to their long-term business success. Now, this is in their annual report and accounts business risk. So it is something that investors should be reading and thinking about. 20% of those companies recognise their role in having to preserve and restore ecosystem services. So that is encouraging. You'd hope to see more evidence of what they're actually doing. 50% of the companies, 12 or 13, talked about pesticides, but this was predominantly from the impact of pesticides on human health and not on ecosystem health. And I failed at the time to really find much discussion on bees and pollinators, sadly. So therefore I expanded my research focus to see how many companies had policies on sustainable agriculture and biodiversity, and this revealed that there's 30% of those companies. So 30% of 25 major companies around the world with exposure to this issue in their supply chain. Basically, the conclusion from that research is there's little to nothing on the business risk of pollinator decline. And my conclusions at the time were that, one, there didn't appear from talking to the companies to be any evidence of pollinator decline impacting their operating costs, though they did acknowledge that that would be something in the future. But there also didn't appear to be any significant activity by companies to address this issue. There's a general recognition that there is an economic cost associated with pollinator and other beneficial organism decline, but we just don't know how to value it effectively. I refer back to the economic deficit and the compensation model. And that I concluded, like Abigail at the time, that investors and Martina, that investors need to engage more with the companies and NGOs and government, because this is a systemic issue, and that they have a role to play in addressing this. Now I've left the corporate, the investment industry world behind me 3 months ago. I've had a very nice time traveling Europe. But if I was to write my conclusions today, I'll probably also finish with that, add to those conclusions. We do know that pollinator decline is a very visible part of general ecosystem decline. We can acknowledge that we don't know how to value it, but we do know its decline is of economic importance, not to mention the importance of the quality of life of our species and other organisms. It is therefore a known risk to financial returns, and therefore we should look at other performance indicators beyond just valuation, integration, and financial return, with which the investment industry could demonstrate their performance in implementing their responsibility for reducing and reversing a known risk, i.e. pollinator declines, to financial returns and to their clients. And with that, I'll pass on to Raj.
Thank you very much. Hi, everybody, and really big thanks to Greenleaf and Jill for putting together this great book, some brilliant chapters in it. I'd also like to thank Aidan Ward and Olivia. Aidan and I co-authored a piece in IP in 2013 called Put the Bee Back in Beta, and Olivia for her help with this chapter. I'm going to start with some assumptions about the substantive issues, and they've been very well dealt with by colleagues earlier, so I won't labor the point. But pollination by bees is very important to the human food supply. The EPA says about a third. Bee colony collapse disorder, technically called CCD, or let's just call it bee decline, has the potential to cause systemic risk, particularly as we find it very hard to anticipate the second and third order effects of the immediate implications. Neonicotinoids are definitely a cause of CCD, but how important the cause, as all the panelists have said, is up for debate. But complicating that is the fact that there are also very serious concerns about the influence of neonic producers on the debate, and listeners will know from experience about earlier debates about tobacco and climate, where corporations with vested interests put in a rather large and concerted effort to sponsor scientific skeptics whose impact, either consciously or unconsciously, was to delay adaptive action. So, what about investors? And here I'm making again some assumptions based on experience from USS and AXA and more recently. Only the most fundamentalist of efficient market hypothesis believers could say that investors have no role to play in a systemic risk issue. The vast majority of investors, when you talk to them, certainly on a Sunday afternoon, will take shared responsibility for this issue. And diversified investors could decide to shape the corporate purpose of the few neonic producers to take account of bee decline and neonic safety issues, and so safeguard the beta of their entire portfolio. I guess what I'm saying in kind of very simple terms is asset owners in particular, but also large diversified index fund providers and others like that could act and could act as fiduciary capitalists or universal owners. But of course, there's a huge change in investor mindset that's needed before this has happened. And that means that the ecosystem around the investors needs to lead on this. And by ecosystem, I mean the academics and the thought leaders, the NGOs, the media, and the regulators. What is that? Well, as Rick was alluding to, the very professional and narrow focus on alpha or even on portfolio risk-return metrics traps investors in being blind to systemic risks. This is an inevitable consequence of portfolio metrics. And for those of you who want to delve further in this, I'd really recommend Steve Leidenberg's new project. So when some of us helped kick off the ESG project over a decade ago, we actually hoped that ESG would help in relation to these kind of systemic issues and corporate implosions. But sadly, there's very little evidence that ESG, as it's developed, is able to meet this need. Listeners will be well aware of the preventable surprises like BP and Tesco and Volkswagen. And en passant, I guess, just since yesterday, I'm hopeful that maybe change might come from such people as Theresa May, who kind of understands that the paradigm needs to shift. Seems is the operative word. Walk and talk is an important distinction, but certainly it's the kind of jawboning that I see is needed. So let me move on to my next slide, which is what are investors doing? So I have the fortunate privilege of not being in an investment firm and therefore can maybe speak a little bit more bluntly. It's great to hear what Abigail and Rick are doing in terms of trying to integrate the mispricing of assets relation to bee decline. And it's certainly the case that could have some stock value performance issues. But I would say exceptions prove the rule, and most investors are not doing anything on this issue. And I think, as Abigail highlighted, the lack of any sell-side research, and sell-side research is notoriously client-led, indicates lack of client interest. More specifically, bee decline is a systemic risk, as we've all sort of alluded to, which means that it's diversified across sectors and across even asset classes. And so traditional risk management approaches, that kind of diversification, valuation, stock picking, overweighting, underweighting, all very good for managing the metrics, but not very helpful in terms of managing the systemic risk. So what's happening on the engagement front? Well, again, some of the key people have spoken today, but it's a fairly small community. Others are doing what I guess I would call, if I was being charitable or not being charitable, tummy tickling engagement. James Bevan talks about it as tea and biscuits engagement. Asking questions, great, maybe informing investment decisions, but changing CapEx decisions? No, I don't think so. A few US SRI firms, Boston Common, are doing shareholder advocacy, and all power to them, but it's a fairly kind of niche community. And so, in conclusion, I think, which is why Preventable Surprises has started, what we see is that investors are unintentionally and unconsciously, again, enabling dysfunctional corporate and market behavior. So, moving on, what should investors be doing? At the strategy level, the only way, and this is fairly simple, but it's often missed, is the only way to mitigate the risk of CCD or V decline is to make sure it doesn't happen, which means taking a preventative approach to A factor, the neonic production, and ensuring that chemical companies move into safer chemicals, or that chemical companies move into different kinds of agricultural support in the same way that we want to see fossil fuel companies move into being energy companies. This will almost, the good news is that this will be almost certainly cost neutral or positive for over the long term for diversified asset owners and investors. And it may even be profitable for the neonic producers if it helps them avoid a Volkswagen type of situation, and also therefore their main active investors. Of course, this is not what you hear from those companies. And what I've learned, and I guess what many of us have learned over the decade, is that there's a really strong corporate tendency to engage in chicken little discourses. We've heard it from the oil and gas industry about lead-free petrol, from the chemical sector about phasing out the CFDs, from investment banks about capital adequacy. Investors need to take a big breath, smile, and kind of say, actually, no, as fiduciaries, we have and what we would suggest is a fiduciary duty for robust engagement, if you will, a sort of equivalent of what aiming for aid did on the climate change issue needs to be done in this space. Why do we call it robust engagement when we talk so often in Preventable Surprises as forceful stewardship? It's because the scientific certainty, which goes back to that earlier issue about who's shaping the science, but leave that aside, the scientific certainty isn't there. And so at this moment in time, it wouldn't be appropriate, in our opinion, to try to ask investors to be forceful stewards and, for example, ask for transition plans away from neonic production. My last slide. So on Monday morning, what does this mean? I think it's quite clear that investors need to focus as stewards. To pick up on John Kay's point, stewardship isn't an ancillary function, it's the core function of investors today when capital allocation isn't a core part of how markets work. So the stewardship function is the function of choice. We should be asking for disclosure of key positions on positions on key scientific questions and public policy activity, the sort of thing that Influence Map is promoting. We should ensure that the companies have effective and fully independent whistleblowing systems of the kind which might have helped prevent the Volkswagen implosion. We need to, and this is a huge area which investors have been remiss about and need to play catch up on, is we need to make sure remuneration plans really focus executives on the long term and on R&D and on diversification away from these chemical products to more responsible corporate behavior. And those are the sort of carrots in a way, but the stick is that investors need to make clear that if there is share price loss related to information which senior management did know or could have reasonably known about, investors will use legal means to recoup those losses from the executives and board directors in their individual capacity. There is no point charging all the shareholders for the actions of a small team of people, the Malus situation, basically. Secondly, investors need to engage with credible and well-informed scientists and regulators and civil society experts to avoid the kind of goldfish bowl that investors tend to fall into, in my experience. And I think, I hope my colleagues would agree with me, even naturally skeptical investment professionals tend to be overly influenced by corporate views about major ESG-related preventable surprises, and nuclear accidents are one form. So let me conclude. For large, diversified institutional investors, I think we're seeing a movement away from this being a discretionary activity which can be done by particularly highly motivated ESG teams, but if they're not there or if they're not allowed to do it, it doesn't happen. I think we're seeing a shift into it becoming an action which is a mandatory fiduciary duty with those two forms of robust engagement. Thank you. I'll stop there if I may. It doesn't happen. I think we're seeing a shift into it becoming an action which is a mandatory fiduciary duty with those two forms of robust engagement. Thank you. I'll stop there if I may.
Thank you, Raj. Thanks very much. Okay, so moving swiftly on, I will now commence with the Q&A. Abigail, I believe, has moved on to another appointment, so thanks for your time, Abigail, and I will open up with the first question that we received, and this, I think I will start with Martina, and then I'll open it out to everyone. The question is, should the approach to de-decline be left solely to the corporations, or is it a government regulation issue?
Well, it's a very good question. Thanks, James. I mean, what we're trying to make very clear is definitely a multi-stakeholder approach. Hence, I didn't put the neonicotinoid debate per se, that the pesticide debate, at the forefront of my slides here, because we can only do that type of, and Abigail and Raj have it outlined correctly, we can only go down that route by engaging with companies and investors, showcasing the risks and opportunities implied. But going down the route of just mandating corporate disclosure and responsibility per se would not work. And I think it's also not in the interest of all the other stakeholders involved. But I think it's also important, and we're also bringing this out actually in our chapter, this brings us back to the question around responsibility and consumer responsibility and what we can do as either as retail investors, or what we can do actually as consumers of products that are ultimately linked somehow to this debate. And I feel this is an area and an angle that's very often overlooked. Abigail touched on that in the context of pensions a bit earlier. I would like definitely to bring the debate here as well back to this point. So it's a high-level debate amongst companies, investors, and other stakeholders, but ultimately it also concerns all of us.
Thank you. And Rick, would you agree with that?
Yeah, I think it definitely shouldn't be left just to the companies and to governments. I think the evidence, when I've met the companies, where we did 2.5 years ago, someone would say they weren't even able to speak to their competitors about dealing with this issue due to competition issues or something like that. And then with the government regulatory overview, I chaired a seminar back in February where we had Paul Donovan, the chief economist of UBS, talking on this issue, and he highlighted that government's very likely not to want to do anything on this because it's a long-term issue and outside their typical 5-year mandate. So I'd also highlight the revolving door from the DEFRA chief scientist who was lobbying for overriding the neonicotinoid moratorium, who now works at Syngenta. So there are issues there, and this touches on Martina's point about we all have responsibility, whether this is in terms of the products we buy or in terms of how we lobby our financial service providers. And if we're failing by government and companies, then there are other alternative political systems, such as the VADs, I know is very keen on promoting de-decline, as well as some of these other petition systems which can represent the views of people around the world.
Thank you. Raj, how would you respond to that? Is it the government, is it regulation, or is it corporate companies, or is it, again, like you said before, is it the investors that need to take the lead?
Something about, can you hear me?
I can, Raj, yes, great.
Jeremy Grantham, the founder of GMO, said something about climate change, and I think it's very relevant here. He said, we should not unnecessarily ruin a pleasant and currently very serviceable planet just to maximize the short-term profits of a few energy companies and others. And that's the problem. These companies have very strong vested interest to continue with business as usual. The remuneration plans are highly geared to that. Those are the plans which the investors have approved, by the way. So major change is not in their personal or corporate interest. And change, as we know, what did someone say? The only person who likes change is a baby with a wet nappy. It's not going to happen easily. So if governments go AWOL, which I fear they have done on these sort of issues before, and maybe again are doing now in some countries, it's going to be a big problem. It doesn't excuse investors who have long-term fiduciary duties for also going AWOL. And so my answer is all of the above, but asset owners, and particularly I would say asset owners who have an interest in sustainability, environment, biodiversity, the foundations, the philanthropists, they should be leading this debate in a much more proactive way than I've seen so far.
Thank you. Okay, because we've run a little bit over time, just one more question today, and it's a question that's possibly one from left field. So in answers of a minute or less, and starting with you, Rick, this time, the question being, how has the recent Brexit result affected these issues?
That's something I was coming back to the UK just after the result, and I think for me, my passion and my interest is on the environmental issues, and these things transcend any political issues. There are political commitments to climate change and other aspects. So I kind of feel that it means we just have to work harder to, regardless of which politics is there at the moment, focus on respecting the science and what it is telling us, and thinking how can we hold other actors within our economy accountable for acting on the science.
Raj?
I think there are two things to say in less than a minute. The first is that many people voted for leave, but few of those voted because they wanted to see less environmental protection. And so I think it'd be really unfortunate if the Brexit debate became confused with cutting those environmental safeguards and the preventative action that we've seen coming from Europe, which this country hasn't been supportive of. The second thing to say is that I'm very hopeful about Theresa May's comments about wanting to see a different kind of corporate culture where responsibility is much more central to corporate performance and long-termism is much more central. Now, will she have something? It's a big question, but I've never heard that coming so clearly. And, Nixon had to go to China. Maybe it's the Conservative Party who will make this paradigm change happen.
Sure, interesting. Finally, Martina.
Thanks a lot, James. I feel I just could add a few points here, but not much. I agree fully. I think it, again, is not just purely down to one key stakeholder, and obviously the policymakers play an important role here, but given the wider agenda, and don't forget that the UK has been at the forefront of actually developing and implementing many of the type of ESG legislation and strategies we are seeing now translating into EU directives. So I'm just mentioning the Anti-Bribery Act here, or the Modern Slavery Act just last year. So I feel, we hopefully will stay on track. And again, adding to Raj's comments, Theresa May seems to be very upfront and outspoken about securing, for instance, a specific labor right within organizations, but that could filter down to other type of strategies, policies, implementation, and obviously then reporting. So I hope, especially the new EU directive on reporting of disclosure of actually non-financial information and diversity will be literally one of the key initiatives that will be taken forward, regardless of the current discussion around Brexit, and that we will see many more other innovative strategies linking to either ES or G, then also either continued or be taken forward, regardless, and ideally in cooperation with the European partners. Given that the European, you've seen in all my slides, the European regulators, of course, have been driving a lot of debates around preservation, around protection from actually exploitation and damage to natural capital. So I hope that this will continue.
Thank you, Martin. Well, that brings us to the end of the webinar. First of all, thank you for all the contributors from the book, The Business of Bees, and obviously thank you for all the attendees that have logged on today. I'm sure you'll agree that it's been very stimulating hour also discussing these issues. As you see on the final slide, you will be receiving an email shortly. I believe my technical guys told me in the next few hours, an email containing the link to your free copy of the book and also details regarding the launch. So from all of Greenleaf and the Business of Bees, thank you.